Shutdown 2025 isn't just about government offices closing or federal workers missing paychecks. It's about something bigger. It's about the debt game America plays, the political battles that fuel it, and the markets that react in real time. If you're a trader, an investor, or even just a citizen, you need to understand that this shutdown is more than politics. It's a signal about where America stands, where its leaders are failing, and where the markets are headed. Point 17, the debt game kicking the can shutdown 2025 exposes something bigger than closed offices or delayed paychecks. It exposes the reality of America's debt game. For decades, the United States has borrowed and borrowed, running up trillions in debt, while leaders in Washington promise solutions that never come. Every year, when it's time to raise the debt ceiling or approve a budget, the same thing happens: arguments, finger-pointing, last-minute deals, or in the worst case, a shutdown. This is not just a financial problem, it's a trust problem. America's entire financial system rests on one principle: the world believes the US will always pay its bills. That trust is what makes the US dollar the global reserve currency. It's what allows the US government to borrow at low rates. It's what gives American market stability even in global crisis. But every shutdown cracks that trust. When politicians can't agree on basic funding, global investors start to ask dangerous questions. What if the US can't manage its debt? What if it defaults? Even the suggestion of default rattles markets. Bonds get repriced, yields jump, currencies shift, confidence wavers. For traders, the debt game is more than headlines, it's market fuel. The US debt situation directly impacts the dollar, the bond market, and global capital flows. Shutdowns don't solve the debt problem, they highlight it. They remind everyone that America's finances are stretched and that political dysfunction makes real solutions impossible. The lesson here is clear. Traders can't ignore the debt game. Every time the US flirts with a shutdown or debt ceiling crisis, volatility spikes. If you're not prepared, if you're trading as if nothing has changed, you'll get caught off guard. Debt isn't just numbers, it's confidence. And when confidence cracks, markets move. Shutdown 2025 proves once again that America isn't just playing with budgets, it's playing with trust. And in markets, trust is everything. Point 2 in the politics. Power before people. Shutdowns are rarely about money. They're about power. Shutdown 2025 is no different. On the surface, argument is about spending, deficits, and budgets. But the deeper truth is that shutdowns are political weapons. Leaders use them not to save money, but to gain leverage. They threaten shutdowns to pressure the other side, to rally their base, or to prove their loyalty to ideology. The tragedy is that while politicians play games, ordinary citizens pay the price. Workers miss paychecks. Families struggle. Businesses lose contracts. Markets shake. But in Washington, lawmakers continue to collect salaries. Their offices remain open. Their benefits don't stop. They are insulated from the very pain they inflict on the public. Shutdown 2025 reminds traders and citizens alike that politics is theater, but the consequences are real. It's easy to get caught up in the sound bites and speeches. But the reality is that shutdowns don't solve problems. They make them worse. They delay solutions, erode trust, and deepen divisions. For traders, the lesson is this: don't confuse political noise with market reality. Politicians may talk tough, but markets react to the consequences, not the speeches. Shutdowns slow the economy, delay data releases, and spook investors. That's where the real impact lies, not in what leaders say, but in what actually happens. Shutdown 2025 exposes the brutal truth. In Washington, power comes before people. And as long as that remains true, shutdowns will continue. Point 3, the market shockwaves. Markets are allergic to uncertainty. Shutdowns inject uncertainty like poison into the system. Shutdown 2025 is no different. As soon as the shutdown began, markets reacted. Stocks wobbled. Companies that rely on government contracts saw their share prices drop. Consumer confidence weakened as households feared stalled paychecks. Businesses slowed investments. Unsure how long the disruption would last, every sector felt the tremors. In the Forex world, the dollar swung violently. At times, it weakened as investors questioned US stability. At other times, it strengthened because despite dysfunction, it remained the least bad safe haven. Gold rallied as fear spread. The yen and Swiss franc rose as traders sought safety. Treasury yields spiked, then dropped as investors tried to guess whether the US prioritized debt payments during the shutdown. For traders, these shockwaves are both danger and opportunity. Shutdowns create volatility, wild swings that can wipe out the reckless and reward the disciplined. Traders who chase every move, hoping to catch the perfect trade, get destroyed. But traders who respect the volatility, who wait for patterns, manage risk, and position carefully, can thrive. Markets also suffer from missing information during shutdowns. Government agencies like the Bureau of Labor Statistics or Census Bureau stop releasing critical data. Traders and investors are left in the dark, making decisions without the usual signals. That lack of data only adds to the volatility. Shutdown 2025 proves the same point. Every shutdown does. Markets don't care about speeches. They care about uncertainty, confidence, and capital flow. For traders, the question is always the same. Are you disciplined enough to ride the shockwaves, or will you drown in them? Point 4. The global spillover shutdown 2025 may be a domestic fight in Washington, but its effects reach far beyond America's borders. Allies like the UK, Japan, and the EU look at the shutdown and worry, can the US be trusted? Can the dollar remain stable? Will American dysfunction spill over into global trade? These questions matter because the US is at the center of the global financial system. If confidence in America shakes, the entire world feels it. Rivals like China and Russia seize the moment. They point to Shutdown 2025 as proof that democracy is weak and divided. They use it to argue that America is no longer reliable, that its system is broken for them. Shutdowns aren't just US failures, they're propaganda victories. Global markets respond too. European equities fall when Wall Street shakes. Asian currencies move when the dollar spikes or dips. Oil prices react to fears of slowed US demand. In today's interconnected world, a shutdown in Washington sends ripples through every trading hub from London to Tokyo to Frankfurt. For US traders, the lesson is this: don't think America's problems stay in America. Shutdowns create global spillovers. Capital shifts across borders. Currencies react worldwide. Commodities adjust. If you trade US markets without watching global moves, you're missing half the picture. Shutdown 2025 proves that America's dysfunction is never local. It's global. And every trader, no matter where they sit, must pay attention. Point 15. The lesson for traders: survive the chaos. Shutdowns aren't just political crises. They're stress tests for traders. Shutdown 2025 is a live classroom teaching lessons that can make or break your career. The first lesson is discipline. Shutdown volatility punishes emotional traders. If you chase headlines, you'll get destroyed. If you trade out of fear or greed, the market will expose you. But if you stay disciplined, following your plan, managing your risk, you'll survive. The second lesson is patience. Shutdowns create chaos, but chaos doesn't last forever. Eventually, deals are struck, the government reopens, and markets stabilize. Traders who preserve capital during the storm are the ones who profit when clarity returns. The third lesson is risk management. Shutdown volatility is unpredictable. One tweet from a politician can send markets soaring or crashing. If you're over-leveraged, you're finished. But if you risk small, cut losses quickly, and protect your account, you'll be ready for whatever comes next. The final lesson is perspective. Shutdowns remind us that markets are bigger than politics. Politicians may fight, but markets follow confidence, capital flow, and psychology. As a trader, your job is not to predict Washington. It's to respect the volatility it creates and survive long enough to capitalize on the opportunities. Shutdown 2025 is painful for workers, businesses, and communities. But for traders, it's a test of discipline, patience, and resilience. And if you pass, you'll come out stronger, sharper, and more prepared for the next storm. Conclusion: close strong. Shutdown 2025 isn't just another political crisis. It's a reflection of the debt game America plays, the political theater that sacrifices people for power, the market shockwaves that punish the unprepared, and the global spillovers that shake the world. But for traders, it's more than news. It's a lesson in discipline, risk management, patience, and survival. Because shutdowns always end. The real question is, when they do, will your account still be standing? The debt game will continue. The politics will drag on. The market will always react. But the trader who learns from Shutdown 2025 will walk away with something priceless: the knowledge that in chaos, survival is the ultimate edge.